Did you know that when you buy a Big Mac, you're not just buying a burger, you're helping to fuel one of the largest real estate empires on the planet? McDonald's serves over 69 million people every single day, but the Golden Arches don't make most of their money from flipping burgers. The real secret to their billions is the land underneath their restaurants. To understand how this happened, we have to go back to the beginning. The story starts in 1940 with two brothers, Richard and Morris McDonald, in San Bernardino, California. They weren't real estate moguls, they were restaurant innovators. They created something called the Speedy Service System, which was basically an assembly line for food. This brilliant system allowed them to make high-quality food, fast and cheap. Their little restaurant was a local sensation. Then, in 1954, a milkshake machine salesman named Ray Kroc walked in. He saw the incredible efficiency and immediately knew this concept could go national. He convinced the brothers to let him franchise the McDonald's brand across the United States. Kroc's initial plan was simple. He'd take a small percentage of the food sales from each franchise. But there was a huge problem. The profit margins were razor-thin. Even as new locations opened, the corporate office was barely making any money. Kroc was struggling to pay his bills, and his dream of a global empire was on the verge of collapse. He had the ambition, but he didn't have the cash. The entire future of McDonald's changed the day Ray Kroc met a financial genius named Harry Sonneborn. Sonneborn looked at the business and saw something Kroc had missed. He told Kroc, "You're not in the burger business. You're in the real estate business." This single idea would transform McDonald's forever. Sonneborn proposed a radical new strategy. Instead of just licensing the brand, the McDonald's Corporation would buy or lease the land for every new restaurant. Then, they would lease that land back to the franchisee, but at a significant markup. This brilliant move shifted the entire business model. McDonald's wasn't just a partner anymore. It was the landlord. And they didn't stop there. They implemented something called a triple net lease. This means the franchisee, the person running the restaurant, is responsible for paying all the property taxes, insurance, and maintenance costs. The corporate office just sits back and collects a steady stream of rent, free from the headaches of property management. But here's the cleverest part. The rent isn't a fixed amount. It's calculated as either a base minimum or a percentage of the restaurant's gross sales, whichever is higher. So, when a franchise does really well and sells a ton of burgers, McDonald's corporate gets a bigger slice of the pie. It's a win-win for them. To make sure this model worked, the company became obsessive about location. They assembled a dedicated real estate team that used sophisticated data to find the best, highest traffic corners and prime commercial spots in every city. By owning the most valuable real estate, they created a safety net. If a particular franchise owner failed, it didn't matter. McDonald's still owned the prime piece of land, and they could simply find a new operator to take over. This strategy slowly but surely turned a fast food chain into a global real estate titan. The definitive turning point came in 1956 with the creation of a new company called the Franchise Realty Corporation. This was the engine for their real estate strategy. It allowed McDonald's to use the value of the land it already owned to secure loans to buy even more land. It was a self-perpetuating cycle of growth. This financial power gave Ray Kroc the leverage he needed. In 1961, he bought out the McDonald brothers for $2.7 million, giving him complete control over the brand and its destiny. With Harry Sonneborn as the company's first president, the Sonneborn model became the law of the land. The company's unofficial mission statement shifted from selling burgers to acquiring real estate. This strategy has made McDonald's incredibly resilient. During the 2008 financial crisis, when many businesses were collapsing, McDonald's saw an opportunity. They used the market crash to buy up even more prime real estate at bargain prices. The company proved that its real estate holdings were a far more stable and profitable asset than the food business itself. The power of this framework is undeniable. The restaurant industry is notoriously risky. Food costs go up and down, labor is expensive, and competition is fierce. But rent is a fixed, predictable obligation that franchisees have to pay every month, no matter what. By acting as a landlord, the McDonald's Corporation enjoys an incredible 80 to 90% profit margin on its franchise revenue. In comparison, the profit margin on the restaurants they operate themselves is much lower, typically around 15 to 20%. The real money isn't in the kitchen, it's in the lease agreement. This real estate strategy also gives the corporation immense power over its franchisees. To keep their restaurant, operators have to follow every single rule and maintain the brand's strict standards for quality and service. If they don't comply, they risk losing their lease. Since McDonald's owns the land, the franchisee can't just pack up and move their business down the street. This ensures perfect consistency across tens of thousands of locations worldwide, which is the foundation of the brand's global power. So, you have two distinct income streams that feed each other in a perfect loop. The food business generates the cash to pay the rent, and the rent money is used to finance the acquisition of more land for more restaurants. It's a masterclass in business strategy. Today, over 90% of McDonald's 40,000-plus locations are operated by franchisees. The corporate office collects billions of dollars a year in rent and royalties. all without the hassle of managing inventory or hiring a single cook. Their real estate holdings are valued at over $40 billion. They've built an empire where the burgers, fries, and milkshakes are simply the currency that franchisees use to pay for the real estate. So the next time you see those golden arches, remember what you're really looking at. It's not just a fast food joint. It's a symbol of a massive, incredibly profitable real estate company that just happens to sell burgers. Thanks for watching. If you found this interesting, make sure to hit that like button and subscribe for more deep dives into the businesses that shape our world. See you in the next one.